Hi everyone, welcome again to this live event. As usual, I will share a few minutes with you all to take a look at what to expect this week, both fundamental and technically from major pairs. Okay, so let's start taking a quick look at the calendar. Give me a second so I can share it and see how the news are affecting the market. Okay, anyway, so far I do believe the most relevant thing to comment is that we had some disappointing US data coming from the manufacturing sector on Monday, right? Really plummeting the New Year index. And the housing market also print a rating below expected, but not that bad. But what I'm trying to make a point here is that US data was pretty strong on Friday. It encouraged some dollar rallies, and all of a sudden, the first piece of that, despite minor, we had a week. It's really negative. Anyway, market attention is focusing today is the inflation in the US. Okay, okay, I'm back. Seems we had some connection issues. Sorry for that. Not sure what happened, but here I am again. I'm not sure actually what went wrong, but anyway, we'll start all over the comments I was making on data and what we can expect for this week. I was saying that the most relevant piece of data ahead is in a couple of hours. In fact, in just 1 hour, the youth inflation figures, right? I do believe that market attention is focused on this reading because, as we discussed plenty of times, the ECB, the Fed, right, decision of rising or not rates, right, rest into legs. One is employment, the other is inflation. Employment has been good for over 2 years, inflation not. So actually, what it's preventing the Fed from acting is this, right? Low inflation reading, 0.3%, 0.1 monthly basis, 0.2 the core monthly reading is really, really low. And we need inflation to be higher and closer to 2.0% to be more encouraging for the Fed to take a monetary policy decision of keep tightening their rates. Okay. Anyway, I would say also that the next focus of attention will be, of course, in the US. I mean, the minutes from the latest meeting, right, to be released tomorrow, Wednesday. Uh, the meeting was pretty soft. We had a dovish tone coming from Milan, but still, I do believe that the market will be looking here for a close on what's next move will be. As I said, and I don't know if we lost it or not before, there are almost no chances. No one believes that Fed will actually raise rates in June, right? But we are all hoping for it, and I do believe that that's uh, what may help the greenback to continue advancing over the upcoming sessions, particularly if inflation comes up positive. Okay, so far readings in the US have been not much encouraging ahead of, besides, sorry, Friday readings, we had strong retail sales, not so good PPI indexes readings, but I do believe that the market was really happy with those retail sales, and if we have some positive news also today, the dollar can break higher against a couple of major rivals. We will take a look at that in a few. Another thing that looks pretty interesting to comment is that inflation in the UK remains subdued. It was again quite below expectations, below previous really bad news, but we know that the Bank of England will remain on hold until the referendum by the end of June. So I could think that the most important piece of data coming from the UK today was a new poll showing that the Remain is 15 points above the Leaving, right? And that's quite interesting because that's suggesting there's not going to be Brexit after all. Figures what a surprise, and therefore the pound should recover ground if, of course, the dollar keeps uh, weakening, or we get more bad news from the US. Another thing that I believe that's quite important to mention is that we have employment data in the UK tomorrow, and I believe in Australia on Thursday. Yeah, employment data in both countries. In the UK, bad news won't be a big disappointment. We're all expecting more bad news coming from the UK, but indeed will affect the pound and send it lower. While in Australia, things are getting interesting because, the Reserve Bank of Australia cut interest rates by surprise uh, earlier this month. And yesterday they released the minutes of that meeting, right? And everyone was running to price in at least two more rate cuts before February next year. And the minutes show that policymakers were quite reluctant to cut those rates, right? So chances of a couple of more rate cuts ahead have diminished strongly during the past Asian session. And if on Thursday we have good employment data in Australia, the market will be quickly forgetting about those two cuts, and the Aussie can get a nice boost from these figures. Okay. Uh, Another important piece of data to be released next Thursday would be the minutes of the ECB meeting, right? Although we're not expecting much surprises from Draghi ever since he launched for our more in March. I do believe that he will stick to his guns, uh, repeat the whatever it takes, and pretty much it. But I don't believe that the ECB can act right this month, not the next, not the upcoming one, and they will refrain to act for at least 3 or 4 months unless things get really bad, which are not. So I don't think that the ECB can do much at this point. Okay. Anyway, and on Friday, the most relevant piece of data will be inflation in Canada. You know, uh, maybe we don't pay too much attention to Canada lately, but the fact is that oil is skyrocketing and reaching fresh yearly highs is boosting the CAD. So any piece of good data can help the currency to keep on rallying, and that will put an extra pressure on the greenback, right? Which is still struggling to regain some ground. Anyway, I will change. Let me see if I can take you to my charts. and see what we can expect from the market, right? Dollar is getting some love ever since the European opening, with not much behind this dollar recovery, to be honest. In fact, the American currency came under pressure during the Asian trading hours as risk appetite dominates stocks in the session, right? Wall Street was pretty high yesterday. The Dow added almost 200 points. But to be honest, it has been quite irrelevant. Take a look at the daily chart, right? We have been moving well more than 100 points up and down daily basis for most of the past week, and we have this plummet on Friday, right? And on Monday, the index reversed all of those losses, but in general, it has not reached higher highs. And dominant trend still bearish in here. So despite those moves in stocks, it's not that they are telling us that they are going to rally back. I do believe that as closer we get to September, which is when we have elections in the US, the tighter and the erratic will be trading in local share markets, right? They need to know who the president will be before settling a trend. So sentiment through indexes could be a bit tricky these days. But anyway, I would say Asian session was dominated by risk appetite. The strong rally in the Nikkei has put the Japanese yen under pressure, right? And it's around the highs, as you can see, around the highs we have been going through these last days. It's exactly the 61.8% retracement of the latest slide, and the price will remain there until the release of US inflation data. And I believe that if it's good, we can go quickly towards 110. And once above that level, my main target to the upside in the dollar Japanese yen is 110.60, 70. We have former lows in there, quite relevant ones. So I believe that that's a major bullish target in the case of a sharp dollar recovery during the upcoming hours. It's a logical target intraday for today, but of course, if if inflation is bad, I will be going towards downside. We have an immediate support around 910, but we have this congestion zone of lows and highs around 1840, 1850 that the pair needs to break to gain some bearish momentum and fell down towards the 107.50 region, which is the main bearish target for me. If somehow that last level gives up, I do believe that we are going to retest that 105.50 we have seen earlier this month. Okay, for the euro, the fact is that after setting the year high a couple of weeks ago, it has been all the way down, right? And currently, we are seeing some bounce from 1280. I do believe 1280 is a major static support level. I know it's a major static support level, so I will be looking for a break below that to to talk about a bearish movement in the euro dollar that can extend down to 111.20 during this week, right? But what I'm seeing right now, it's I put that small fuel to the latest downward move and take a look. We are topping around the 38.2 in the 1340, 1315 region. So unless we take that level, I do believe that the risk remains towards downside, although some follow through below 1280 is required to confirm that decline, right? If we break below 1280, 1240 is the probable bearish target short term, I mean, of course, then 12, and then 1120, 1160 region. And I honestly can see the dollar strengthening beyond that level, okay? I really can at this point. It's not, we're not talking about real dollar strength at the time being. Anyway, and above that Fibonacci level, there's 1350 I was saying, we can go towards 14. But of course, the main resistance keeps being the 1468, 1460, 70 region, where the pair fell plenty of times over the past year and a half. And we really need to see it breaking above it to recover some bullish potential in the longer term, which I can see it. I do believe that 1120 is the lowest, 1460 is the highest. We will see the euro over a month or even more, right? At least until June Fed's meeting. Yeah, I'm not betting too much of a breakout of that range for this month or so. Sorry. Anyway, and jumping to the pound, uh, uh, the pair has been trading within a clear range since mid last week, and attempts to break lower had resulted in nice bounces so far. But this 45.20, 45.40 region where we have intraday highs has been quite strong, right? And the fact that inflation today disappointed despite Brexit chances have diminished, had put the pair back down from the level. So I honestly wanted to break about 45.50 or so to talk about a bullish continuation. We can extend up to this highs in the 47.70 region, late April highs. But if we don't take that level, I will take approaches to this 45.20, 45.50 area as opportunities to sell, particularly if things keep disappointing in the UK. And yes, that seems a bit more encouraging than what we're expecting. Okay, what I'm also seeing in this 4 hour charts is that we have a 200 exponential moving average and the 20 simple moving average, both in a 10 pips range and flat. That's a clear reflection of the lack of directional strength the pair has at this point. So uh, uh, I would like to play the range, but of course, if we break these lows in the 43.30 region, 43.20, I could expect it to resume a decline, right? Anyway, moving average are telling me that the market is on hold right now, and I fear, I really fear, this situation will extend until Brexit referendum, which is a month ago yet. I don't know. Maybe tomorrow's employment data can move it away from these levels, but I would expect that if we have some violent move, either up or down after the news, the pair will again enter into a consolidative phase, either higher or lower. So don't bet much of a dominant trend, okay? And the Aussie, this is this year rally, right? We plummet below the 50% rally and the retracement, sorry, of that rally when the Reserve Bank of Australia decided to cut rates. And now we are struggling to regain it. I don't see much of an upward potential in here yet. I guess we will wait until Thursday to talk about a longer lasting, a long lasting trend. But what I'm seeing right now is that the price is holding above 72 80 73, which is the immediate support. If we lost that level, I do expect it to fall down to these lows and even lower towards 72, because there's not much in the way until 72 if we lost again these lows. Um, and therefore increase the risk of bearish continuation in the longer term. 72, back to the daily chart, 72 is the 61.8% retracement of this year rally. So below that level, we can go back down to 70, 69, 70, which is a probable target during the upcoming weeks, right? Back to the short term, we have sold today around 73.65. So above that level, I can expect the pair to go up to this 74.50, right? If we had really, really bad news coming from the US. But I would expect that the first test of this region will quickly attract selling interest, right? The name of the game around the Aussie dollar is sell spikes these days. So the first test of that region may probably attract selling interest, but if the retracement and the pullback after that test is shallow and maybe 20, 30 pips, not more, and we keep on pressuring and pressuring, so it's usually a sign that the pair will break higher above that Fibonacci level. So the first approach to it could be an interesting selling trade, but not the upcoming one if the price remains consolidating nearby. Okay, About the Canadian dollar, uh, it's quite interesting that the break of the trend line we discussed the past week has held, but pair has entered in a range right now, trapped in between uh, dollar's recovery and oil strength. Right? Seems for me this is sort of a signal that the correlation is easing, but not yet erased. Of course, it will never be, but also that the sign that the pair may have bottom, right? Still having trouble to regain the 130 figure. I would look for today in the short term, I mean, and for these days, a recovery above this high, some extension above the 30-15 region where we have multiple highs and lows from the past month also. Uh, to confirm an upward continuation to take chances towards the upside up to 3160, 132. Okay, this is the sort of a line in the sign. I do believe that bears will get very discouraged. Discouraged, yes, if the pair breaks above this level. And to the downside, the immediate support comes around 29th. But if we take 29th, we can go down to 28, 60, 50, but not much lower. I will expect some buyer will surge it around this level, even despite oil prices remain higher. Okay. Another thing that I'm watching closely, sorry, is gold because we have the bullish trend. We enter a consolidated phase. We reach fresh highs. We are retreating. I do believe that the long term outlook is still bullish in here, but seems that the market has reached an interim top for now. It does not mean that we are going to see a bearish movement up next, at least as long as until that trend line gets broken, right? But what I'm seeing right now is that in the shorter term, I mean, is that the price is developing within a descendant channel, and we have a failed attempt to break above it earlier this week. I believe at the beginning of the week, that's so far the level held. So I will be paying a lot of attention to that daily descendant trend line, which today stands at around the highs 1281. We have highs, relevant highs at 1282, 1283. So I would say that above 85, it will look a bit more constructive, particularly if it regains that level and maintains gains and aims higher. I would bet then for recovery up to 113, yeah, 1,300, right? But generally speaking, I do expect it to remain bullish. And for oil today, we are seeing some retracement from fresh highs. But overall, I believe that the bullish trend is firm in place. And as long as now 45 holds, 45 because being a psychological level, we can go up to 49.20, which is a major resistance, and it's a probable bullish target. If we take that, 50 is next, and as I said plenty of times, I don't believe that 50 will be taken anytime soon. I don't believe that this constant news that we are hearing about oversupply, supply gluts, and so are not yet over. We're going to hear a bit more about that. Okay. Yeah, I know there has been some news this last few days saying that we have less production in Nigeria because of conflicts in the oil region. We have the wildfire in Canada. All of those bad news meant a diminishing supply, right, in the market. But and that encouraged the rally in oil. But I don't think it's just enough because seems that both countries are close to resume output, and if they do, we'll be back in oil gluts, worldwide gluts. I don't know. The market has expectations that demand for the commodity will resume in the second half of this year. So we are just 1 month away. But I'm not so confident on the second half of 2016 recovery worldwide. Okay. Anyway, that's it for today. I Really hope you enjoyed it and learned something, get something to work with. I really hope so. And okay, okay, there we are. And thanks for sharing this time with me, and see you back in a week, okay? Hopefully. Thank you and bye bye.